Not trip over there. What FireFem and Firebird Fund Managers does, we are a private equity fund which focuses on gender lens investing in the SME space. We have two funds in development. One is an SME fund which gives checks to businesses that may or may not be woman-owned, but where we are catalytic in creating woman ownership over the period of our investment. The other fund is a private credit fund which looks at giving secured and unsecured lending to woman-owned businesses, and where they're not woman-owned, incentivizing woman ownership through rate enhancements and other upside. We firmly believe there are not enough woman-owned SMEs in South Africa, and we want to be catalytic in this space. So I'm talking today on the rise of gender lens investing in Africa, and want to know what is driving the increase and what are the benefits of this. Is it just a word that we're all throwing around because it's trendy, because LPs, big asset owners, are putting money to it? Let's have a look at some of the information and the stats around it. According to a McKinsey study, and this is quoted by the 2 Times Challenge, and I'll give you more information on that in a minute, closing the gender labor gap could add 26% to global GDP in 2025. In South Africa, closer to home, and I know my talk is about Africa, but in South Africa, closer to home, have a look at the rate of expanded unemployment, and have a look particularly, I've got a clicker here because I really want to show you this, and it's very small on the screen, but have a look at the expanded unemployment for women. It's 42.5%. Expanded unemployment definition means work seekers who've given up looking for work. There it is. 42% of our women don't have jobs. Right, so what is private equity and venture capital doing in this space? PE and VC represent 3 trillion of global assets of 75 trillion. I bet you didn't think we were that small, but in any event, we are big enough to make a difference. Nearly 800 billion US dollars goes to emerging markets, and you can assume, for the sake of this talk, that less than 10% comes to Africa. Our PE and VC markets are still nascent in Africa, so any change you make now to how capital is allocated is going to make a big difference to changing the number of women that are employed, the number of women-owned businesses there are, and how we can impact GDP on our continent and the globe. So Preqin is a great data source. They are specialists that look at PE and VC market trends and other alternative asset classes. Asked their LPs, their asset owners, where are you looking to invest over the next 5 years? Have a look at Africa. 24% say they're not invested but want to. 6% say they are invested and they want to continue to invest. That's really encouraging. 30% of asset allocators want to give Africa some money. There's another sort of a diagram image of where investors are growing globally. And although we're small, here we go, it certainly makes a big difference for what you saw in 2008. So who are the players in this space, and why am I looking at these players when we're talking about gender strategies? So let's just touch on them. So limited partners being the partners that partner in your fund that are asset owners, they're pension funds, they family offices, they're DFIs and some of the multinational banks. They are the people that allocate the money and they give it to intermediaries, like maybe there's a few of us in this room, and we are the general partners who then act to invest this money, which then goes down to the portfolio companies, and this is where we want to make a real difference. There is the most fabulous report. Anybody that's interested in anything gender-related, please do yourself a favor and go and download this report. It's an IFC report that was issued in 2019. Until this time, we've had no statistics about the benefit of gender strategies. We now do. This report is actually groundbreaking. So what they said there is that gender gaps in the representation of women as allocators and recipients of capital are actually going to reduce returns, and they went on to show why. So do you know that female partners at GPs or fund managers are 2 times more likely to give capital to women. And what's the measurable benefit of this? Like, why do we care? Like, why does anyone care? I mean, obviously you should care because it's a social imperative, but other than that, why? So they did some work to work out what the different returns were with gender diversified teams versus non-gender diversified teams. And the gender diversification definition is if you've got more than 30 to 70% of your team being women. So only one sex on either side, so under 30% or over 70% is not healthy for any business. Diverse teams add value. And this is in itself is a really juicy little stat, that in their research of thousands of GPs, and their methodologies in the report, so go read about it, the median IRR is 6.4% in sub-Saharan Africa. So when you're going on a roadshow or when somebody's asking you what you're going to give them back, you can throw out this little stat when they're asking you for 25%. What is the median IRR by alternative asset class? Have a look here. There you are, VC people in the room. 8.3% was the median VC return over various vintages, various geographies. So here comes the juicy bit. So what was the enhanced return with the gender diversified teams? And there you can see it. It's 20% higher IRR in those funds that have a diversified team allocating the capital. And how did they calculate that? So you know what the median was? We worked out it was 8%. Non-diversified teams, i.e. male only, returned 0.05% less than the median IRR, and diversified teams returned a higher IRR, giving you a 1.7% IRR difference equal 20% of a median return of 8. VC funds, yay, look at the enhancement in your return, 41% higher IRR with diversified teams. And at the portfolio level, what's happening at the portfolio level? So that was at a fund IRR, but what's happening lower down in the portfolio companies? The portfolio company value and between rounds, and so they determined what they called was a round was either some exit event or a round of capital coming in diversified portfolio management teams were 65% higher. That's a 10% difference. Sorry, I just want to go back to that. You can see in this slide what happens as you reduce the diversification levels and how the IRR difference, or the times, I think that's the times money difference actually, reduces. So what is the situation today as we stand today? What does it really look like out there? So let's start at the top of this pile at the limited partners and see what's going on with limited partners and their gender diversification strategies, their gender lens strategies. What is happening? They're driving a lot of the change around here. There's something called the 2 times challenge, which the G7 countries have got the DFIs to sign up to, and they're trying to mobilize, I think it's $3 billion to strategies with gender lenses, and they've done blimming well on getting it out there. Certainly it's been committed. It still has to filter down into the system, right down to the portfolio companies. But have a look at the graphic there about where the money's going. I think that's quite interesting. 620 million to Africa. What criteria are met by the 2 times challenge? So you need to understand what they're looking for. What do they want to see in terms of a gender lens strategy? They've got 5 different boxes. They've got entrepreneurship, i.e. what stake does a woman own in the business? They've got leadership. How many women are in the senior management team? Employment, where 30 to 50% of the workforce are women. But on that criteria, they've also got some other criteria you've got to meet. It's not just easy as appointing half your team as women. Product or services, they're interested to see what product or services a portfolio company might be selling or service rendering that addresses a need specifically for women. And then last of all, the intermediaries, the likes of the GP, etc., or private credit books, that you must be giving at least 30% of your money to women-owned companies. And you can see this graphic shows you how they've actually allocated it out. Quite a lot through, people that are women-owned and intermediary teams. Let's go to the general partners. What's happening at the GPs? Well, in South Africa, so I sit on the SAVCA board, the SAVCA board, and they've done research which says 30% of all GPs have female, also, sorry, let me restate that. The female representation is 30% at all GPs. But here's the weird stat. Out of all of our GP members, which is 130 of them, only 10 of them are woman-owned. That's a bit dismal, so we're trying a little bit harder, and SAVCA have got a great program to address that. So who's managing the VC funds? We'll have a look at this statistic here. There's venture capital, which is actually doing better than most, if you have a look. At this little grey block is 11% of senior people in venture capital funds are women. You're actually doing better than all the other categories as VC players. At the portfolio company, how's the representation of women? So this is also, what is women receiving? This is also really, really telling statistic. Out of all the funding that has been allocated, how much has gone to women? And this is an infographic which is presented along the lines of a geography. Sub-Saharan Africa, there we go, 7% has gone to women-owned portfolio companies. There's the emerging markets general stat, 8%. That's quite low. I think we can do better than that. By investment stage is even more telling, because look at how many incubators and accelerators have women ownership, but how few, when you get to later stage VC, has been issued to women-owned businesses. This one is also an interesting stat for me, and they've presented this on purpose. So we already kind of worked out that only 7 to 9% of the capital allocated goes to women. But have a look, because people say, oh, but there are not enough opportunities. There's not enough women-owned businesses. I know I've actually said that myself. But have a look here. This is the stat that says, actually, the percentage of early stage opportunity that are women, there were 40 to 50% that they could have been given to but weren't. There's a really interesting reading about subconscious bias in allocating of this capital. Here's another thing. So another story you hear is, well, there are not enough women in my space. They don't actually have enough, there's not enough women in tech or STEM. Well, what they did is they analyzed all the deals in the overall market by sector, and then the deals that were given to women in the sector. And I don't know about you, but that graphic doesn't look so different to me in either space. Very similar. There are businesses that are run by women in every single sector. Senior leadership at portfolio companies has got 19% women. Sorry, let me rephrase that. 19% of the portfolio companies are gender balanced, which means there's somewhere between 30 and 70% of the senior leadership team is women. In sub-Saharan Africa, we've got 18%. And let's just now zoom out just to global companies, and this isn't VC, PE, or emerging market. It's just any company. There's South Africa and Nigeria are doing really well. We have 29% of our team being women. That's not bad. So you know, as private equity and venture capital, we need to push out a little bit more, because if the rest of the market can do it, we can also do it. That's what happens to women in the C-suite, or women getting into the C-suite by McKinsey's research. So starting off around about 48% and dropping down to 22% by the time you get to the top of the funnel. So these are years, and there you go with how many women end up in those roles. And this one, I love this one. This is the path of portfolio companies of a male-led portfolio company and a woman-led female company. So both of them seem to have a similar success rate, or not success rate, if you want, of getting subsequent liquidity. So the males get 17% and the females 13%. But watch what happens next, is that in the next round, they are changed. So the male CEO is not changed. Only 2% of those businesses is changed to a female CEO. But in the female-led businesses, 31% is changed to a male CEO subsequently. And we don't know what this is about. And I was just chatting about it to someone this morning. It might be around, I don't know, women not thinking that they are going to actually grow a global business, or other perceptions around boards and ICs. So what we anecdotally feared is validated by the data. I'm sorry to tell you this, guys. I just feel like I'm banging on a drum that you don't want to hear. But actually, the research has also recently come out from Carter, which is a cap table data business. They've turned their gaze on women ownership. And what we thought was happening in this space is happening. So whilst remuneration for women is actually similar, male and female, in the PE/VC space, it's hiding in the equity. So men are 6.5% of equity owners, but 64% of value. How did that happen? So LPs have a particularly strong responsibility to drive change. They are custodians of the pension funds, of the women giving their savings in, and this is where gender strategies start to get filtered down from. They're driving the bus, let's be honest. But having said that, all the GPs that were interviewed and assessed said that the LPs placed a lot of emphasis on gender during committing capital and asking questions, but actually the follow-on with action about making sure it happened wasn't there. Have a look there. And here's an interesting thing also about GPs. I don't know if you've heard about the pink ceiling, but have a look at that stat. Senior women in investment teams, 10%. Senior women in investor relations marketing, 30%. We already worked out from the statistics that women are more likely, 2 times more likely to give women portfolio companies some money. So guys, anybody in the room here that are fund managers, you've got to do something about the female representation in your business. The World Economic Forum has put out a research document on a whole lot of practical tips that can be done. And this includes mentoring and sponsorship. So I'd like to appeal to all the men in the room, and it's said quite aptly by an IFC director, men should preempt the chicken and egg issue with more active sponsorship. If you don't have women in senior positions, then men can and should play the role. Here's my perler, right? A gender strategy is not only important as a fund theme, it's an operating model imperative to enhance your IRR and the value of your portfolio companies. And men, you can play the game as well. Thank you.